Peter Rose, Longwood Currency Trading. It's another cold day in March 2021, and as you can see, the Beau dog wants to go out and do his business. So my wife is up north with her brother, so I have the distinct pleasure of hiking around in the woods with him. So we're going to go out and do that. Down this. Whoa, whoa, whoa! I've got my ice grippers on here. There, did you get dizzy with that? You can't walk around out here because it's been sometimes 8 below zero at night, and it's just taken all this snow and packed it down so there's like a brick. You can see still got plenty of snow here up on the mountain. If you go down, we're at 960 feet above sea level, and if you go down onto the flats I'm in the Lakes region in New Hampshire, so if you go down into like the Rochester area, or that's just not even very far south, they don't hardly have any snow left on the ground. Where here we've probably got oh, I don't know, maybe if you walked around out there 6 inches, you can see the tracks in the snow out there. I got a friggin' porcupine. Jesus. It's we call them Hugh Pine. There's like several of them, but you gotta be very careful of letting the dog out with the porcupine, because you know that's an $800 deal at the vet, and the vet's over in Concord, New Hampshire. We just have to be very protective of that. But they're coming out now and starting to forage and go after anything they can get, so we have to be very careful with that. Anyway, this is the day as it is. The video, finally, let's get to the point, Peter. Okay. I've been spending a lot of time in the last series of videos that I've done talking about the importance of having a grip on your emotional state, having an understanding of your personality as it relates to your trading, because the way that you trade has to be in harmony with your psychological makeup. You can't fucking change your psychological makeup to trade. That doesn't work. And that's why I think there are a few people that are so hyper successful, you know, that I don't know, 4% of traders, because they've understood that and they've mastered that. I didn't get the significance of it as far as trading goes until recently. I've always had that because that's what we were taught in martial arts, from the philosophical side of things. My karate master, Sam Brock, taught us that the only way you can change who you are into who you'd like to become is to alter the way that you think, because we're a product of the way that we think, and thoughts are things. And that's very true. And so what else is true is the dog isn't here. Hey, Beau! He's not listening to me. He's on his own tunes. There he is. Where are you? There you go. Okay, Beau, come on. We're walking in the snow. Come on. I mean, there are folks out there that talk about psychology and trading. I mean, there's Mark Douglas. I've mentioned him in the last 3 or 4 videos that I've done, and nobody wants to hear that shit. All you want to hear is, you know, what's the secret sauce to trade entry, and you know, how do I get 50 pips a day? And you listen to all this shit that's out there on YouTube and sometimes in books, although the stupider ones, they don't write books. They just broadcast shit on the internet. Like, oh my God. I know a trader who's plugged in, been in the trading currency markets for a long time, and he's plugged into a lot of these guys that are phonies out there. And you listen to their ads and you'd think that they know what they're doing. He goes, oh, I know that guy. He's never traded before. So, barring that, your ability to to trade, this is a new concept. I haven't heard anybody talk about this before. Your success at trading is based on rules, right? I mean, I think we all can make that. I'm falling in the snow here. We can all make that connection that if you don't have any rules, you just throwing shit against the board and you go. And they have to be logical, reasonable rules. Even if those rules won't work for somebody else, as long as you can make them work, well, that's great. But the key to the rule is that it can't be a negative. The rule shouldn't be, don't do this. The rule should be, if this happens, do this. Some of your trade entry rules, all of your trade entry rules are of that proper form. They're positive rules. They're positive affirmation rules. When let's say you believe in moving average crossover systems, and so one of the rules might be when the short period moving average crosses the long period moving average, you buy if it's crossing in an upward direction. That's a positive rule. When this event happens, do this. That's a positive thing. You look forward to that because you want to get into the trade. The antithesis of that is a negative affirmation or a negative expectation rule. Oh, when the price, I'm in a trade, and when price reacts against me and gets to my stop point or my mental stop or a limit order or whatever it is, then I got to get out. I'm wrong. That's what you say. Oh, when my stop is hit, it means that I was wrong. I made the wrong decision. Well, how many of us like to admit that we're wrong? I've got a trade on right now. I don't want to admit that I'm wrong. And, I chose today to do a long-term trade, and so I'm wrong as far as what's happening right now. But in the big picture of a long-term trade, and to me a long-term trade might be a few days, the loss as a percentage isn't, it isn't that bad, but it's still a loss. And if my stop gets hit, then or I have to close the trade out, that's a negative. That's a wrong, right? And so the positive, how do you take a positive swing on that? You got to change the way that you think, as Master Brockett said. The only way you can change who you are and who you'd like to become is to alter the way that you think, because you're a product of the way that you think, and thoughts are things. And so when we look at this stop, just as one instance of what we're talking about, trade entry stop out, you cannot think of that as being wrong. But you are wrong because the stop got hit. Well, you could put a stop way out and say, well, I'm pretty confident in the directional movement of this. I'm out on a daily chart, and the chart's going up, and so I'll put my stop loss pretty far away in order to give the price room to move, so that eventually it'll go up in that it'll go up in that direction. But you've got a long stop, and so when that stop gets hit, you go, oh geez, I guess I was wrong about the direction of that, or I guess I was wrong about this or that and the other thing. The problem with those stops is that not only does it show you that you're wrong, but it costs you a lot of money. So, and we all know that you're not supposed to trade by dollars, you trade by pips. But in the long run, pips equal dollars. You lose $1,000, you're fucked. That's just the way that it is. Beau! Man, he doesn't want to come out walking here. It's cold on his feet. Beau! He is just dancing to his own tune. I don't know what he's up to. I do have to get... Oh, there he is. Oh, man, he's way down in the woods. Hey, come on! Your Your fans are looking for you. Come on, come on, come on, come on. Here he comes, the great Beau dog. Thank you for coming. Where were you? Man. We're supposed to be exercising here. This is the rule. Exercise. Okay. So how do you take such a critical event that you have to do, which is get out of the trade when it's going against you, either because it's going against you or because you've lost as many dollars as you care to lose, or whatever the reason it is. The fact of closing that trade as a stop loss means you're wrong. Now, you can have a winning trade that's moving forward and it's up 20 or 30 pips and it starts to retract against you, and you say, hey, you know what, I think this thing's run out of gas, I'm gonna get out. And you either get out through a trailing stop on a limit or something like that. And that's not a negative. You don't say you were wrong. You got 20 or 30 pips. You know, it went to 20 or 30 pips and it's now starting to flutter a little bit, and you just decide to take your profit and go. That's a positive. So what's positive about a stop out? Not a damn thing. You're stupid. You made the wrong decision. That's what's the little gremlin that's going around in your head. I got a little bridge troll. I've told you about my little bridge troll, Ed. He sits up here on my left shoulder, and he tells me to do stupid shit. And that's what he tells me when I get out of a trade from the trade entry standpoint as a stop on a loss. He says, man, you're just stupid. You made the wrong decision. You don't know what you're doing. You're wrong. You're wrong. And I got that little mantra playing around in my head that I was wrong. So when I go to take the next trade, I say, I don't want to be wrong again. You see the problem that occurs. And that's exactly what happened to me earlier today. I took a trade. I thought things were going to go in my direction. I turned around and looked. It wasn't moving in my direction. Boom, I got out. 1% loss. It was a lot of money, but still only 1%, which is fine. Most best practices say limit your losses to 2%. You know, well, I took out 1%, and that's fine. So when you're looking at these events of loss, and then I looked at this next trade that I'm in, and I go, oh man, I lost on that one, and I'm unsure about this, and so I'm going to give a little bit more room to breathe, and I'm going to do this, and I'm going to do that, and so I got a loser. Now, it's all part of the plan because the amount of loss is percentage-wise equivalent to the gain that I'm looking for. I've got 4 times the profit target that the loss is at, and so that's okay. It's still a lot of money, but I got to balance that. Well, what happens if I have to pull the trigger on that one? What happens then? Then I'm really a stupid ass. So there has to be a different way of looking at these losses from a stop standpoint than from a negative standpoint. You have to find a positive slant to looking at getting stopped out. Because if you look at it as a negative, that'll make you feel bad, and it will affect the next trade that you take. And what happens when you run into those proverbial statistically likely 6 losses in a row? I mean, if you trade 300 times, the statistics are that you're going to hit those 6 losses in a row. So here, let's say today I take another loss. If I take another loss today, it'll probably be 3%. I'll be 4 down for the day. And so what happens when I go in for my third trade? I'm not going to trade again today. If I go in the next day, what if that third one is a loss? What if the fourth one is a loss? What if the fifth one is a loss? Is it my system that's wrong? Am I wrong? Or am I just caught in some statistical probability? As a day trader, I trade a lot, and so I'm going to hit that statistic often. So what do I want to do? Get my bowels in an uproar every time I start going down one of these loss strings? Because I just had a string of 5, 6, 7, 8 winners in a row. Well, there was 6, and then I lost a small one, and then I won 2 more, I think. That was last month. But if you can hit losers, you can hit winners. But it's not sufficient when you're in the middle of losing something, even if it's a single stop, to say, oh, well, yesterday or 15 minutes ago, I had 6 winners in a row. I lost because the stop means I'm a loser. I made the wrong decision. We've got to flip that around. You got to find some other way. Is there another way? Yes, certainly there is another way. There is another way to look at that. But it's one of those things where I can't identify that for you in a video because it becomes a very personal thing. You have to understand the other person's personality and where they're coming from. You have to get to know them in order to discuss this type of thing, in order to show them how to change the way to think. Because not everybody will think the same way. Not everybody will consider a change in the way that they think to be valid for them. You have to work personally with somebody. So I can't solve the problem here for you. I can only alert you to the fact of something that you need to do. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day. And I'm cold and heading for the house.